The crypto market is changing faster than ever, and right now, XRP is becoming one of the most watched digital assets in the entire financial world. Many people are entering crypto with small amounts of money and asking the same question every single day. Can a normal person really grow a small account into something big using smart trading and patience? The answer is yes, but only if you understand risk, market psychology, and how to control emotions while trading. In today's breakdown on XRP Gold Silver Scope, we are going to talk about a powerful crypto trading strategy that beginners can understand easily, even if they are starting with only $100. This is not about gambling or chasing hype. This is about understanding market movement, using discipline, and building consistency step by step inside the crypto market. One of the biggest mistakes new traders make is believing they need thousands of dollars before they can start trading crypto. That is completely false. Many successful traders actually started with very small amounts and slowly built their accounts over time. The important thing is not how much money you start with. The important thing is learning the right habits from the beginning. If you learn proper risk management early, you already have a huge advantage over most people entering the crypto market today. Now, before anybody starts trading XRP, Bitcoin, or any other cryptocurrency, the first thing they need is a secure and trusted crypto exchange. Your exchange is basically the place where all your trading activity happens. This is where you buy, sell, open positions, and manage your funds. A lot of beginners rush this step and choose random platforms without understanding how important security and functionality really are. A good exchange should have smooth trading tools, strong security systems, fast execution speed, and a clean trading interface that beginners can understand easily. After creating an exchange account, the next step is funding the account and preparing for futures trading. Futures trading allows traders to make money when prices go up and also when prices go down. This is why futures trading has become extremely popular in the crypto world. During bullish markets, traders can open long positions, and during bearish market movements, traders can open short positions. This flexibility gives experienced traders more opportunities, but it also introduces more risk if someone is careless. This is exactly why risk management becomes the most important skill in crypto trading. Most beginners lose money not because their analysis is bad, but because their risk management is terrible. They use too much leverage, they put too much money into one trade, and they panic emotionally whenever the market moves slightly against them. Professional traders think differently. They focus on survival first. They understand that protecting capital is more important than chasing fast profits. One of the safest ways beginners can approach trading is by using low leverage. Leverage basically means borrowing buying power from the exchange. For example, if someone uses 5 times leverage, their trade position becomes 5 times larger than their actual account balance. While leverage can increase profits, it can also destroy accounts very quickly if used carelessly. This is why smart traders stay conservative and controlled instead of becoming greedy. Now let's talk about chart analysis, because this is where trading decisions actually happen. Every crypto asset, including XRP and Bitcoin, moves according to supply and demand. The charts help traders identify areas where buyers or sellers become dominant. Some zones act as support levels where prices usually bounce upward, while other zones act as resistance levels where prices often reject downward. Understanding these zones can help traders improve their timing significantly. One important concept every trader must understand is overbought and oversold conditions. When a crypto asset becomes overbought, it usually means too many traders have already entered aggressively and the price may be due for a correction. On the other hand, when an asset becomes oversold, it often means fear has pushed prices down too hard, and buyers may soon step back into the market. These emotional cycles happen constantly inside crypto, because the market is heavily driven by psychology. This is why indicators can sometimes help traders identify stronger probabilities. Indicators are not magical prediction tools, but they can provide structure and guidance when used correctly. Some indicators focus on price momentum, some focus on trading volume, and others analyze market sentiment. When combined properly with support and resistance zones, they can help traders build a more disciplined strategy instead of randomly entering trades emotionally. For example, if XRP reaches a strong resistance zone while market sentiment becomes extremely bullish, experienced traders may actually become cautious instead of excited. Why? Because professional traders understand that markets often move opposite to public emotions. When everybody becomes overly confident, corrections usually become more likely. Similarly, when fear becomes extreme and traders panic sell, opportunities often begin forming quietly in the background. Another important thing beginners need to understand is patience. Crypto trading is not about opening trades every few minutes. Many new traders overtrade because they think more trades automatically mean more profits. In reality, overtrading is one of the fastest ways to destroy an account. Professional traders wait patiently for strong setups. Sometimes the best trade is actually no trade at all. Discipline separates profitable traders from emotional gamblers. When starting with only $100, every decision matters even more. Small accounts require strong emotional control because losses feel bigger psychologically. This is why beginners should focus less on becoming rich quickly and more on developing consistency. If you can learn how to protect your account, manage risk, and follow a strategy correctly, you already place yourself ahead of most retail traders in the market today. The crypto market rewards patience, discipline, and education over time. XRP especially continues attracting attention because many investors believe its future role inside global payments and financial systems could become massive in the coming years. Whether someone is trading XRP short-term or holding long-term, understanding market structure and proper strategy can make a huge difference in results. Now that we understand the foundation of crypto trading, it is time to go deeper into how actual trade execution works inside the market. This is the stage where most beginners either improve rapidly or completely destroy their accounts because emotions start taking control. Many people think trading is only about predicting whether XRP or Bitcoin will go up or down, but the reality is much bigger than that. Successful trading is mostly about controlling risk, managing emotions, and following a repeatable system with discipline every single time. When traders open a futures position, they are basically making a prediction about price direction. If they believe XRP will increase in value, they open a long position. If they believe XRP may decline temporarily, they open a short position. Futures trading gives flexibility because traders can potentially profit during both bullish and bearish market conditions. However, the danger comes when beginners start using excessive leverage without understanding how quickly liquidation can happen. Liquidation is one of the most painful experiences inside crypto trading. This happens when the market moves strongly against a leveraged position and the exchange automatically closes the trade because the trader no longer has enough margin to support it. Many beginners enter the market dreaming about fast profits and immediately use 50 times or even 100 times leverage. At first, this may look exciting because profits can appear huge very quickly, but the same leverage can wipe out an entire account within minutes. This is why experienced traders usually stay conservative with leverage. Low leverage provides breathing room. It allows the market to fluctuate naturally without immediately destroying the position. Crypto is already volatile by nature. XRP, Bitcoin, and altcoins can move aggressively within short periods of time, especially during major news events or sudden changes in market sentiment. Smart traders understand that survival is more important than temporary excitement. Another critical concept in trading is position sizing. Position sizing simply means deciding how much money to place into a single trade. Professional traders almost never risk their entire account balance on one trade because no setup is guaranteed. Even the best strategies can fail sometimes. Markets are unpredictable, and unexpected volatility can happen at any moment. This is why disciplined traders usually risk only a small percentage of their account per trade. For example, someone trading with $100 might only use $5 or $10 per setup while keeping leverage relatively low. This may sound small, but it protects the account from major emotional damage and allows the trader to survive longer inside the market. The goal in the beginning is not becoming rich overnight. The goal is gaining experience while protecting capital. One thing many people fail to understand is that trading success comes from consistency, not from one lucky trade. Social media often creates unrealistic expectations by showing massive profit screenshots. But what people do not see are the risks behind those trades or the losses that may have happened before. Real trading is much more boring and disciplined than what most influencers show online. Professional traders focus on repeated execution rather than emotional excitement. This is where market psychology becomes extremely important. The crypto market moves heavily based on emotions. Fear and greed control the majority of retail traders. When prices rise quickly, people become greedy and rush into the market emotionally because they fear missing out. When prices fall aggressively, panic spreads, and many traders sell at the worst possible moments. Understanding these emotional cycles can help traders avoid common mistakes. For XRP specifically, emotional volatility can become even stronger because XRP often reacts dramatically to legal updates, partnership news, exchange activity, and broader crypto sentiment. Sometimes XRP can remain quiet for long periods and then suddenly explode with massive movement within a short time. This unpredictability is why discipline and patience are absolutely necessary when trading XRP. Now let's discuss support and resistance in more detail, because these concepts are essential for understanding market structure. Support levels are price zones where buyers usually become active and slow down downward movement. Resistance levels are areas where sellers often enter aggressively and slow down upward momentum. Traders use these zones to identify potential entries, exits, and reversals. When XRP approaches a strong resistance area after a major rally, smart traders do not blindly chase the price higher. Instead, they watch carefully for signs of weakness or rejection. Sometimes the market may reject strongly from resistance and create a correction. Similarly, when XRP reaches important support after heavy selling pressure, traders watch for signs that buyers are stepping back into the market. Candlestick behavior also plays a huge role in trade confirmation. Candles tell a story about market momentum and trader emotions. Large bullish candles often show strong buyer confidence, while large bearish candles can indicate panic or aggressive selling pressure. Rejection wicks, consolidations, and breakout candles all help traders understand what may happen next. Volume is another major factor that many beginners ignore. Volume measures how much buying and selling activity is happening during a move. If XRP breaks above resistance with strong volume, the breakout may have more strength behind it. But if the breakout happens with weak volume, there is a higher chance the move could fail and reverse quickly. This is why experienced traders combine multiple confirmations instead of relying on one single signal. Risk-to-reward ratio is another powerful concept that separates professional traders from emotional gamblers. Before entering any trade, experienced traders already know how much they are willing to lose and how much they hope to gain. For example, risking $10 to potentially make $30 creates a favorable risk-to-reward setup. Over time, even if some trades fail, good risk management can still keep traders profitable overall. One of the biggest traps in crypto trading is revenge trading. This happens when traders lose money and immediately jump back into the market, emotionally trying to recover losses quickly. Usually this leads to even bigger losses because emotions completely destroy decision-making. Professional traders understand that losses are part of trading. Instead of becoming emotional, they stay calm, review mistakes, and wait patiently for the next quality setup. Another dangerous habit is overconfidence after winning trades. Sometimes beginners win several trades in a row and suddenly believe they cannot lose anymore. This often causes them to increase leverage recklessly or ignore risk management rules. The market punishes arrogance very quickly. Humility and discipline are critical for long-term survival. Many successful traders also keep trading journals where they track every trade, entry point, exit point, emotions, and mistakes. This may sound unnecessary at first, but over time it helps traders identify patterns in their behavior and improve decision-making. Trading is not only about analyzing the market, it is also about analyzing yourself. The reality is that crypto trading can absolutely change financial situations over time, but only for people who approach it seriously and responsibly. XRP remains one of the most closely watched cryptocurrencies because many investors believe its future potential inside global finance could still become massive. But regardless of how bullish someone feels about XRP long-term, short-term trading still requires structure, patience, and emotional control. At this stage of crypto trading, the real difference between beginners and consistently profitable traders becomes very clear. Most people can learn how to enter a trade, but very few people learn how to stay profitable over time. The crypto market is not difficult because of analysis alone. It is difficult because of human psychology. Emotions, impatience, and poor discipline are the main reasons most traders fail, even when they understand basic strategies. To build long-term consistency, the first thing a trader must accept is that losses are completely normal. No strategy in the world wins every trade. Even professional traders experience losing streaks. The key difference is that professionals do not panic when losses happen. Instead, they focus on execution quality and risk control. One bad trade does not define a trader. A repeated pattern of poor decisions does. This is why capital protection is always the first priority. If your account survives, you can always recover and grow later. But if your account is wiped out, there is nothing left to build on. That is why experienced traders treat every trade like a small, controlled experiment rather than a guaranteed income source. They understand that survival in the market is what eventually leads to success. Another important habit is staying selective with trades. Many beginners feel pressure to trade every day, but professional traders often wait for high-quality setups instead of forcing trades. In crypto markets like XRP, opportunities do not appear constantly in perfect conditions. Sometimes the best decision is to stay patient and observe the market instead of reacting emotionally. Market conditions also change frequently. At times, XRP may move in strong trends, while at other times, it may move sideways with no clear direction. Traders who adapt to different market environments tend to perform better over time. Trend-following strategies work well during strong momentum phases, while range-based strategies may work better during consolidation periods. Flexibility is a major advantage in crypto trading. Another major factor in long-term success is emotional discipline. The crypto market is designed in a way that triggers emotional reactions. Rapid price changes, sudden spikes, and unexpected drops can easily create fear or excitement. Traders who cannot control these emotions often make irrational decisions. For example, entering trades too early out of fear of missing out or exiting trades too early out of fear of loss. Professional traders train themselves to think logically instead of emotionally. They follow their system even when it feels uncomfortable. This is not easy, but it is necessary for long-term consistency. Emotional control is not something you are born with. It is something you develop through experience, reflection, and discipline. Risk management also becomes even more important as your account grows. Many traders who become successful with small accounts end up losing everything when they start scaling up because they abandon their original risk rules. Increasing position size does not mean increasing risk percentage. The best traders scale carefully while maintaining the same level of discipline they used when they started. When trading XRP specifically, it is also important to understand that it behaves differently compared to many other cryptocurrencies. XRP can remain quiet for long periods and then suddenly experience strong movements based on news, market sentiment, or broader crypto cycles. This means traders must always stay aware of volatility changes and avoid assuming that past behavior will always repeat exactly the same way. One powerful long-term approach is focusing on probability instead of prediction. Instead of trying to guess exactly where the market will go, professional traders focus on setups that have a higher probability of success based on historical behavior. This mindset shift alone can dramatically improve decision-making over time. Another important lesson is avoiding overcomplication. Many beginners try to use too many indicators, strategies, and signals at the same time. This often leads to confusion and inconsistent results. Simple strategies that are applied with discipline often perform better than complex systems that are not followed properly. Clarity is more powerful than complexity in trading. It is also important to continuously learn and improve. The crypto market is always evolving. What worked in one phase of the market may not work perfectly in another phase. Successful traders stay updated, review their trades regularly, and adjust their approach when necessary. Growth comes from learning from both wins and losses. Eventually, trading becomes less about excitement and more about consistency. At the beginning, people are often attracted by the idea of quick profits. But over time, the focus shifts towards stability, discipline, and gradual account growth. This is where real trading success begins. For anyone starting with a small account like $100, the journey should be seen as a learning phase. The goal is not to rush profits, but to build skill, confidence, and experience. Every trade becomes a lesson. Every mistake becomes an opportunity to improve. Over time, this approach creates a strong foundation for larger financial growth. XRP continues to remain an important asset in the crypto space, and many traders watch it closely for opportunities. But regardless of which asset you trade, the principles remain the same. Protect your capital, control your emotions, follow your strategy, and stay patient with the process. If you can consistently apply these principles, you are already ahead of most traders in the market. Trading is not about perfection. It is about consistency over time. Thank you for watching and going through this full breakdown. If you found value in this analysis, make sure you stay connected with XRP Gold Silver Large Scope for more crypto trading insights, XRP updates, and market breakdowns designed for beginners and developing traders.